Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This segment is brought to you by CommercialAgentSuccess.com. Check it out if you're a commercial agent or a managing broker for training that's unbelievable for commercial agents. CommercialAgentSuccess.com. We have an interesting show for you today. We're going to talk about real estate syndications, partnerships that are set up to buy commercial real estate. And they've been around a long time. There's been a lot of changes over the years. And there's been a lot of changes kind of based on what's happened in the world lately. Well, please welcome my guest. It's Gene Trowbridge. He's managing partner with Trowbridge Sidoti. It's a law firm. And Gene actually wrote the book on syndications. Check out his third edition of It's a Whole New Business. And it's available on Amazon. And it has a lot about crowdfunding as well. And Gene's joining us on the phone. Gene, thanks for being with us again.
Well, you're welcome. I'm sure all of your interviews are interesting. But thanks for saying that. And Michael, I only wish I could be there this time. Last time, remember, I was in town and we were in the studio, and I thought it was great. So sorry I can't be there.
Yeah, well, thanks for being on the show. And Gene, you wrote the book and you have seminars. Your law firm helps people with syndications, and I think it's a very interesting topic in the real estate world. How is business today? I don't mean your business per se, but how is syndication world? Or is it still happening a lot? Is it still very popular?
Extremely popular. Michael, the reason you syndicate is you don't have enough money to buy all the real estate you want yourself. So you've got to pool money from other people, and financing is plentiful, but you might have to have 30 or 40% down. So that's another reason. If everyone's a 20% down investor and the bank wants 40, you got to go out and find yourself a partner, Michael.
Yeah, that's right. And a lot of people have ddone that for years, and sometimes they've done it wrong.
Sure.
And we've had the Jobs Act and other things that have kind of allowed a little bit more freedom there. Just as a brief recap, what can people do now to raise money that is illegal? I mean, it is legal. We don't want them doing illegal stuff.
Yeah, we don't have enough time to talk about all the illegal that they can do.
Right.
But just one more comment. The last figures I have from the SEC are that the private placement market, which is basically what we're talking about, 2018 was $1.8 trillion. Wow. And that is bigger than the new money raised on Wall Street during that time.
Wow.
So it's huge. It's huge. The way you can raise money generally, and of that money we're talking about, the figures I've seen is about 95% of it is raised in something called a Regulation D. And Regulation D has really two parts to it. What a lot of people call the family and friends part, and the other part is the advertising part. Mm-hmm. So that's where it is. If you have a list of investors with whom you have a previous relationship, you can raise money from them without advertising. Mm-hmm. And in that case, you can take sophisticated and accredited investors. The Jobs Act came along and said, we're going to let you advertise, but you can only take accredited investors because they don't know you. They're rich, they're smart, they can ask the right questions. So if you advertise, you're limited to accredited investors. Now, that isn't the most popular method. The most popular method today, Michael, is still where you're doing sophisticated and accredited investors, and many experienced syndicators have all the investors they need. They don't want to go through the work of advertising and finding new people that they don't know. So the vast majority of offerings that we do are still 506B, friends, family, sophisticated, and accredited investors, no advertising.
And remind our audience, Gene, if you will, in brevity, the difference between accredited, non-accredited, and then sophisticated.
Sure. Well, we can't deal with non-accredited investors at all. That's not it. They either have to be sophisticated, which basically means alone or with some advisor. They're smart enough to figure out the risks and decide if this is a good investment for them. Accredited investors, it's simple dollars and cents. As far as individuals go, Michael, if you have $1 million of net worth, not counting your primary residence, or you make $200,000 a year if you're filing an individual tax return, or $300,000 if it's a family filing a joint return, either of those two tests just flat out says you're accredited. We don't have to worry about if you know anything. You're just accredited, so you're deemed rich and smart. The sophisticated investors, we really have to worry about whether they know what they're doing. So that's the breakdown of those two, Michael.
Yeah, well, that's good. I mean, that's important. I know I had a call one day where a gentleman wanted me to invest $500,000 and with me buying a property and have his mother invest with me. And I asked him, I said, well, what other investments and holdings does your mother had? And he said, that's it. That's everything. And I said, no, we're not doing this. We need to diversify that into some safe vehicles. But now, Gene, a lot of investors have maybe gone into some syndications, maybe as a limited partner or a general partner, and now they're ready to sell, and they're trying to figure out what to do there. What are some of the options, and can some of them do 1031s?
Well, that's quite popular today. You can imagine, Michael, if you bought something 5 or 6 years ago in this cycle, you've got some gain, you've made some money. So now the question is, how do I move that equity into another property without diluting it with by paying income taxes? And without a real primer on 1031, the tax-deferred exchange, all I'm going to say is the only people who can take advantage of 1031 exchanges are people who have a deed. Their name is on title. And so that's a problem. If you own 30 units in an LLC or you're a limited partner in a limited partnership, you're not on title. Mm-hmm. The partnership is. Mm-hmm. The LLC is. So down to the individual, we're not going to be able to take advantage of 1031 exchanges, but the entity can. You can have an LLC that owns a 50-unit building, and now you want to trade into a 200-unit building. You can do that. That's fine. One deed for another. What happens, though, is in that transaction, you're going to run into an investor who doesn't want to go into the next deal. Maybe they're too old. They don't want another 10-year holding period, or for some reason they want some liquidity. So to make this short, how you deal with that, in escrow, when you put the property in escrow, the syndicator needs to know how much money is going to be sent out to the investors who don't want to go into the next deal. And that goes into the escrow account, but all the money that stays with the investors who want to go in the next deal, that goes to the accommodator, and that's in the accommodator's account in the name of the entity, right? So at that point, we're breaking up who wants to get out and who wants to stay in. And if you get out, it's a taxable distribution, and if you stay in, it's a 1031 exchange.
All right. Well, that's awesome. So that allows a certain group of the investors to move on and do an exchange.
Right.
And do you ever see a partnership that knows they're going to sell, and some of them maybe do an exchange and some not, that they go ahead and sell they change the title from maybe that original LLC to 5 or 6 or 10 different LLCs, maybe a year or so before they sell, or is that not something that's done?
There is a technique on that where you take the ownership out of the LLC, but you'd have to put it into a tenants in common because they need to have title. So everyone could set up their own little LLC and take title in a tenant in common, and with good tax advice, maybe maybe in a year or so move forward on their own. That was prevalent a while ago. I don't see much of that anymore because the IRS thinks that a bunch of tenants in common are really a partnership, and partnership interests don't qualify for an exchange, no matter what you call it. You got 10 people, all with tenant in common interests in this apartment building. Who's going to run it?
Yeah.
Everyone has their own deed, so that gets complicated. So I wouldn't do that without a tax attorney or CPA advising you. And that's a little above my pay grade. But one of the things that is happening in this exchange, let's say you have a number of people who want out, and so now you have a smaller number of investors that are staying in. You still have to go equal or greater in value to the property, and you have to go equal or greater in the loan to qualify for the exchange. So you may need a capital infusion. So you may have to restructure the LLC to allow you to take in new capital, or here comes an investor with $500,000 who'd like to be the new capital. But that investor, she has a deed to real estate. She wants to complete an exchange. So you end up with a tenant in common relationship. The lady with her $500,000 is a tenant in common. The existing LLC is a tenant in common. Collectively, they qualify for a new loan and buy a big enough property, and away you go.
Yeah.
That's quite common.
Yeah. Well, that's a great solution there. And we're going to take a short break. When we get back, I'm going to ask Gene a couple things. One, what if you're a limited partner in a syndication and you're the only one that wants to sell? What are your options? How might that look? And another question I want to ask him is about crowdfunding and what he sees out there in crowdfunding today, especially when it relates to groups of people syndicating for investment. So stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com.